here. She said that the majority of the attendees probably will be people that are either considering starting a business, had just started a business, or they're in that sweet spot where they have a small business and they're trying to expand it and they're trying to learn more about securing resources and securing finance to do that. So I will talk a little bit about my experience and what I know from both theory and practice. As Vivian mentioned, I'm all that fancy title goes by to say that I'm a commercial lender at Vantage Bank. Okay, so one of the common questions that I get, and one, I started being a lender in 2018, and I was what we call a baby lender. So as a baby lender, I specialized in small businesses. And when I say small business, I mean, small loans, companies that were starting, startups, and I was there at the bank to be a resource to entrepreneurs that were looking into securing capital to take their idea or their small business into something bigger. And the most common question or / challenge that I would see, it was how much startup capital do they actually need? And my favorite answer and the most realistic one is that it depends. I went back to search online, I read papers, I read articles, surveys, data, and I had so many conflicting responses. On average, according to a survey by Wells Fargo, they say that the most common entrepreneur needs around $10,000 of capital to start a business. However, the Kaufman Firm survey says that on average, a person, an entrepreneur, needs $80,000. So all this to conclude that it depends. What I always say is that it is important to calculate and consider all fixed and variable costs. And the sweet spot or the sweet timeline that I use is 6 months. So how much of fixed and variable spending you're going to incur in the first 6 months of existence. So what are your fixed costs? Fixed costs are costs that you know are going to stay the same. Your rent, electricity can be up and down, but it's usually around the same. And then I have a slide where I will explain a little bit more or examples of some of the costs. And variable costs, of course, those are your costs that can go up and down. The first step, and what I always tell businesses before asking for capital, for a loan, for funding, is to really know how much it's going to cost you. I remember one of the first loan opportunities that I had was with this young lady who was starting a spa. And she came very confident that she only needed $20,000. When we started talking, I started to ask, okay, what about this? And she's like, oh, I haven't thought about that. And then I said, what about that? What about this? What about? So the need went from 20,000 all the way to 150,000. These are some of the funds, fixed startup expenses. Some of these can be either fixed or variable, again, depending on your company. So initial lease payment. So not all businesses are going to have that, for instance. So a lease payment, not everyone is going to secure a space from the get-go. A lot of entrepreneurs, and there's a common saying that started in the garage. I have friends who started a jewelry or shoes company in their houses. But that's one of the examples. Of course, if you're going to do a business that needs a storefront, then that's something that you need to consider. And a rule of thumb is to include the first 6 months. Lease deposits, FF&E, that's furniture, fixtures, and equipment. If you're going to open a bakery, for instance, that's one of the first costs you're going to incur. Improvements. So improvements are, let's say you're going to lease a space and you're going to turn it into a restaurant or a cafeteria. It is rare that a landlord is going to give you a perfect space that has the colors and the decoration and the everything that you need. So you always need to take into account improvements. Even if it's in your house, for the most part, if you're using your garage or even your kitchen to bake or to cook, you're going to take that into account. Professional business insurance, that I always say you can never be enough insured. And a lot of people think they can save by without having it, and that's so important. And also, with that comes in mind, into account having the right insurance. Equipment, marketing, working capital. So working capital is what you're going to need again for 6 months of employee salaries. If you're going to have employees, all your bills, all of that is working capital. If you're going to have, if you're going to be buying orders, that goes in there as well. Website development and miscellaneous costs. One of the things that I've seen recently increase a lot for businesses is the expense they're doing in their website and their equipment. And I did some research and some studies, and that is correlated with the increase of e-commerce, so your online purchases. So people are betting into having a strong online presence and then websites that are customer friendly and that are easier to navigate, and there's a cost associated to that. So that also goes into some of the expansion costs. Building a website can be a tremendous undertaking that can turn out to be very costly. And so securing funding. As I say, starting a business can be a dream, and it's a dream for many entrepreneurs. But securing funding is one of the top challenges they have, if not the first challenge, once they pass the fear stage, like I say, the jump. Whether you're launching a new business, a new venture, or expanding an existing one, you need to find the right funding sources, because not everyone needs a loan, not everyone needs to tap into their personal savings, not everyone needs a venture capital investor. And the competition is tough, and investors always look for the best opportunities, but with the right approach, you can secure the capital and the funding that you need. So I'm going to dive into the 8 most popular ways to secure funding, especially for startup businesses or for expanding existing ones. So the first 4 are bootstrapping, crowdfunding, venture capital, business loans, incubators and accelerators, angels investors, government grants, which are some of my favorite ones, and partnering with other businesses. So of course, before I dive more into anything that has grant, is basically free money that you have to work for. Okay, so bootstrapping. That is basically using your own funds. There's many pros and cons associated with it, and these, quite frankly, only work, or it's a great option. I would not say only work, but I would suggest is the best option for businesses that have low initial investment requirements. So if you're going to be a real estate agent, that there's not a high cost associated with that, other than passing your exams, taking classes, but you don't have to right away have an office. You don't have to right away have billboards. So it is what I call a low initial investment requirement business. However, what's the risk with it? Let's say, you have your bank account is $20,000, and you go through it, and of course we want all businesses to be successful, but the reality is that they may or may not work. So assuming that you only use all of your savings and it does not work, then that puts you on a vulnerable personal financial situation. So, I mean, we hear great stories that are inspiring about how someone add a second mortgage to their house, and they are now the next Steve Jobs or whatnot, or they created this impressive business or service or product that is revolutionizing, the industry, but that can or cannot be the outcome. So that's why I always tell people, just be aware that if you use all your savings, that's it. After, there's not going to be more. And now crowdfunding. What I was telling my coworker Adamaris, who is here, is that I was doing a lot of research into this because I've always been fascinated with this. And this is a popular way to raise funds for your business. There's a lot of platforms online. I put Kickstarter or Indiegogo to ask for donations from people all over the world. And I was actually playing with Indiegogo this morning, and basically, for instance, there is this product that is a new vacuum cleaner. And the entrepreneur uploaded the pictures, videos, and everything, and he was asking for $600,000, more or less, I think. And he was already at 570 something. Wow. Yes. So what he was offering in return for a donation was a special price. So people, and I click, donate just to see the process, and you can donate $5, $10, $15. But imagine the power of that, right? If ever, yes.
I'm sorry. How do you bring me to your mic? Are we gonna have access to your presentation later on, like through video or like?
Yes, you're going to record it, or if you want, I have no issues sharing the presentation. I did it myself, so you can have it. And so this is a great way to raise funds for a product or a service that people are going to be excited about. Think about it. If there is this product and someone comes to you and says, all I need is for you to give me $10, and you're so excited about this, more than likely you're going to jump into it because you're like, okay, how is inflation nowadays? That's a Starbucks, basically. Mm-hmm. It's not even 2 Starbucks, it's 1 Starbucks. So think about it. And I really encourage people to go just see the website, play with it, Kickstarter, Indiegogo. There's so many. I just put those 2 because are the ones that I've seen, but there's so many. And then, however, it can be also challenging to find enough people to back up your idea. So that's the only thing. But it's all about how you present your idea. And I guess when it comes to this, about how exciting your idea is. Maybe if you say, I don't know, I'm going to open a nail salon. Well, maybe people are going to be like, well, there's a lot of that already. But for entrepreneurs, for innovators, I think this is a great idea. Also, it's basically, well, if you took an economics class, there's a saying that there is no such thing as a free lunch. But for the most part, it's free money, other than you have to offer something in return, like a discount to buy the product. Venture capital. Okay, yes. So venture capital. And this is, have you watched Shark Tank? Mm-hmm. This is what they are. They're venture capitalists, for the most part. Venture capital firms invest in businesses that have a high potential for growth. They often look for businesses with a clear path to profitability and a strong team. So going to a venture capital firm is for businesses that are new but have a strong business plan, because of course these are people that have millions of dollars or hundreds of thousands of dollars, and they're looking into investing into something that gives them a higher return than what they can make having their money sitting at the bank. They have analysts, they have financial planners, financial analysts that look into the product, the service, and they ask for statistics, revenue, profit and loss, projections. That's a big one. And that's one of the things I always tell entrepreneurs: you need to have solid projections. And I'm going to talk more about local partners where you can get help to do that. But there's so many tools. You don't have to be a financial guru or an engineer or a math person to get projections. You just have to have a deep and real understanding of your business. This is, as I mentioned, this is a great option for businesses with a lot of potential, but needs more funding that they can get through other means. So I would say venture capital is for bigger undertakes and for businesses or companies that are looking into at least like hundreds of thousands of dollars.
So large-scale
projects.
Projects or developments.
Yes, and like you seen in Shark Tank, right? Mm-hmm. They ask usually for either royalties, a percentage of revenue for X amount of years, or, and that's one of the things that you have to consider, is how much of your company you're willing to give up.
Yeah.
Because some of them ask for a stake in the business. Of course, this makes sense. I mean, it's their money. Business loans, and this is my expertise, and I'm going to expand more into this after I go to the first 8. But business loans are a popular way to finance a business, and I would say the most popular way to finance a business. You can get a loan from a bank, like me, from the Small Business Administration, and I think we have 2 representatives or 1, or alternative lenders. This is a great way for business that need a lump sum of cash to invest in growth. But of course, you need to have excellent credit history and a solid business plan to qualify. So since I'm gonna go more into detail, I'll just say this about the business loans, and then I'll expand more, since it's the most popular way to secure financing. Angel investors. So an angel investor is basically they're wealthy individuals that are looking to invest and to bless your business, and they usually look for businesses that have great potential. They are more flexible than venture capital firms, but they also have higher expectations of returns. They look for either higher expectations or for higher returns. And again, just like venture capital, this is for businesses with a lot of potential, but needs more funding than they can get through other means. So basically, angel investors, and I've seen this happen, is there's wealthy individuals all across the nation, and they are looking to invest their money that they have in their bank account. The difference between this and a venture capital firm is that angel investors, I will not say it's not as structured, but they don't have maybe all the requirements that a venture capital firm, but they tend to be a little bit more involved with your business because they have higher expectations and they look for potential. But you can also, and actually if you Google angel investors, you're gonna find a website that, I think it was Angel Investor, something like that. But you can find websites where people, and some of them ask for a little Zoom interview and they tell you whether they want to put their money in your business or not. So there's many resources. I have a friend, a good friend of mine, who always tells me, just think about all the money that is out there in the world and all the ways that they are to secure money. So if you have a good idea and you have a good product or a good service and you believe in it, money will follow. You just have to take calculated risks, like I said. Incubators and accelerators, these are one of my favorite ones, and I will explain more about it when I talk about local partners. But these are excellent resources, and they're basically organizations that help startups grow. I think I will consider this center
We're definitely an incubator.
An incubator and an accelerator. They often provide funding, mentorship, and resources to help business get off the ground. I always tell people that whenever they're starting their business, what they need the most before even securing financing is mentorship. Because it's the first time that they've gone through. For instance, like now, I know way more than I know when I started being a lender 7 years ago. It's the same thing. If you go to an incubator, they're gonna tell you probably all the do's, don'ts, yes, no, what have worked, what has not worked. Again, starting a business is not a guarantee, but you can follow all the right steps in theory, in book, and it may not work out, and you cannot follow them and work out. But at least, like I said, calculate the risks. Know at least what the reality is that you're walking into or jumping into. And again, this is a great option for businesses starting and needing help getting their footing and their foot off the ground. Government grants, like I said, these are probably my favorite ones because there's nothing tied, for the most part. The money is not tied to anything. It's not like the angel investor where you have a wealthy person or a financial or their financial managers asking you, how is he doing? How are you doing these? Government grants are a great way to secure funding for your business. They are often awarded to businesses that are working on projects that align with the government's goal. So environmental sustainability, entrepreneurship, all of that is aligned with the government. And this is a great option for businesses that are working on projects that are of public interest. I would say that even projects that are not of public interest get government grants, but the usual trajectory is that businesses with public interest. But I know that there's, and I will again talk more about it, I think it's the next slide, there's so many grants out there. And there's micro grants, there's what I call small, medium, large, venti grant, the tall, whatever you want of grants, they're out there. And it goes, because I participated as a judge for a competition that, it was micro grants, it was $250. But for a small entrepreneur, for instance, this lady was doing wood, it's called woodland crafters. So this lady, Griselda, was doing wood signs, and she needed a machine that cuts the wood and whatnot. And she went to it's called Latina Hope. She went through it like 4 times to secure enough money to get the machine that she needed. So like I said, there's a lot of programs out there. It's just hustling at the beginning, learning all the resources out there. So partnering with other businesses can be a great way to secure funding for your business. You can team up with another business to pool resources and share costs. This is a great option for businesses working on similar projects and leveraging each other's strengths. What we see this more and more common is, for example, have you seen those common working spaces? Where you go to a building and there's like 10 different offices and they share the real estate and they share, if assuming each one was the little owner of their space, that's an excellent way of partnering with other businesses. Or I have a friend who owns shoe stores and boutiques, and she has partnered with a jewelry maker that sells her earrings and her necklaces at her store. She gets a portion, and she already and the lady that makes the piece of jewelry gets, I think, like 80%, and my friend, just for having the things there, gets 80%, and that even helps increase her sales because people go to buy, I don't know, earrings, and you're there, so you get shoes or a dress or pants or whatnot. So that's another excellent way. If you see that someone is doing something that complements what you're doing, your brand, your product, your service, always try to do that.
Bless you.
Yes, bless you.
Would cooperatives fall into this? And have you ever worked with cooperatives?
I have not worked for cooperatives. Are those, like, can you share the specific examples so I can give you the right answer?
Well, like Magic Valley, I mean, just to name somebody,
Yes.
something that's here, Magic Valley Electric Company, but it's businesses that are shared, that have not just one business owner, but multiple, or members. And
Yes.
that's why I was asking, partnership is basically a partnership could be a cooperative.
Yes, that's a little bit different. Yeah, that's a little bit different. But partner with other businesses also, it can be that, let's say you sell sandals and I sell high heels, and we say, oh, let's open a storefront. And we go 50-50, we split everything even. Local resources. So UTRGV has a lot of resources. For example, the Small Business Development Center, that SBDC, I used to send, like I mentioned at the beginning, I used to work more with startups and smaller businesses than what I do right now. And the first step, or the first, in our first meeting, I will always tell them to go to the SBDC and develop a business plan. And they help you, they sit you down with an analyst, I think that's what they call them, and they write you, they don't do it for you, but they help you develop a business plans, projections, understand your costs, and I think that helps you put things into perspective and to a real, okay, this is what I need. Yes?
Is there a cost for that?
No, it's free. You just have to, and all these, for the most part, are free. You just have to go and know about the resources and make an appointment. And they're always asking for work. What they will talk about. Okay, so what about financing? 27% of businesses are not able to receive the business funding they need. The most frequent impact of lack of funding can be preventing a business from growth, but also it can impact sales and force them to lay off employees. That's why it's so important, and of course, different stages it affects differently. So that's why it's important to understand a little bit, if that's the route you're going to take to secure financing, it's important that you understand a little bit of what you need. Okay, so SBA loans. She wants to participate. That's okay. She's our youngest entrepreneur, starting young. So SBA loans. What is an SBA loans? These are loans that are backed by the government. So some, depending on the product that you choose, some can be 75% backed by the government, 80%. So it really depends on the lender that you go through it and the approval process. What do you need to qualify? You need, of course, good credit history, show ability to repay the loan, either with historical sales, financials, or with good projections. When it says based on location, but that means that it has to be in the U.S. That's what it means. And then the reasons for the loans, you have to need the proceeds for business purposes, which includes working capital, inventory, equipment, real estate, and more. And I would talk a little bit more about the different types. Some pertain more to these, some don't, but I will show everything that SBA has available for you. How are we doing on time?
We're at 1:11.
Okay, perfect. So we can have time for questions, because I know that's what people like the most. Questions. Okay, So here are all your types of SBA loans, or the majority that I've seen. So the most popular ones and the ones that I've done the most in my career are your SBA 7A loans. They're general business needs, and they are up to $5 million. And they are versatile and extended repayment. Then we have the SBA Express loans, which I also have done with just a couple. And the approval it's quicker, and it's up to $350,000, and it's for expedite processes. I believe the one I did was because they needed more inventory for expansion. And then the SBA 504, these are for your bigger purchases, fixed assets, real estate. So that's basically what it means. And it's all the way from $125,000 to $20 million. SBA disaster loans, that's when there's a disaster. I've never had to do one of those. SBA Community Advantage loans. And then we have SBA Export Working Capital, but I don't think we have anyone doing exports right now.
We have some entrepreneurs that
Oh,
are.
really? Okay.
Yeah.
Sorry about that, I take that back.
So they're
then-
not in the room right now.
Okay. So then we have some of, that's a loan that is targeted and, for that niche in particular. And then the SBA Export Express loans, it is for quick funding for export operations, and I believe it's all the way to $500,000. And SBA International Trade loans. So as you see, SBA covers all your needs from loans, from very small needs to the larger needs, which is your 504s, $20 million. And think about that, it's $20 million. I think the biggest 504 I've done was for a restaurant that was purchasing or expanding in a new market, and it was for $2 million. I was, well, with equipment and everything. But yes, so I've done several SBA loans throughout my career. I do less of that now and more of the conventional lending, which is the other type. So in lending, we have two broad products that I say in terms of loans: SBA loans and conventional loans. Your conventional loans are the ones that you get through the bank. They are not backed by the government. They're just done through any financial institution. And I would say that if you're a small business, and let's say that you're like, okay, no, I don't want to give up 30% of my business to someone that is offering to inject capital. Well, then there's other ways to secure, as I mentioned, funding. I would say start with your current bank, and if they're not able to help you, because also we have a lot of regulations, and that's where SBA steps in. So SBA is, I would not say more flexible, but it's more flexible. Because you have the security as a banker that if for whatever reason the customer can no longer pay the loan, SBA is going to step in, and so our exposure is lesser than compared to a regular loan where we are 100% exposed. And okay. So before I go into saying thank you, if the main takeaway, or if there's one takeaway that, based on my discussion with Vivian and what we're trying to accomplish, is that you really understand the finances of your business. Your business cycle is so important. For instance, and I didn't include it here, but what can cause a problem is not even that you are not receiving enough revenue, but the timing that you're receiving your revenue. If you receive your revenue until the 15th and you get a loan, whether SBA or conventional loan, and your payment is due on the 1st, which SBA typically the loans, the payments are due on the 1st, that's going to create a problem because you won't have money until the 15th. So that's another thing, and that's why I say it's so important to really understand not only your costs, your fixed costs, your variable costs, and your business cycle and your business model. That's really, really important. I know the talk is just about securing financing, but I always tell my business, one of the things that I always sit down with my business, especially the smaller ones, is, okay, let's understand your cash flow cycle. Let's understand when does the money come in and when does the money come out and what happens in between. because that's so important as an entrepreneur. If you have that discipline and that knowledge from the get-go, then you're going to have it for the long run, and you're going to make more than likely, again, nothing guarantees anything, but at least I've seen that difference in people that truly understand their business model and their timing and their cash flow compared to those that don't. They're like, no, but I get like $700,000, and I'm like, yes, on the 15th, your loan payment and all your things are due on the 1st. So that's why you always need a line of credit, right? And a loan is not always the fix for problems. Sometimes you just need an adjustment. Sometimes you just need to really understand, okay, why am I not getting paid? I have a customer who said, you know, when I grew, when I fired 80% of my customers and I kept the 20 that paid on time, the 20 that paid well. And I know at the beginning it's hard to make those choices, but that's one of the things that I always share. To me, that was mind blowing when he told me, you know, when I fired 80% of my customers. So thank you so much for having me here. Here is my information. Please feel free to write it down. I'm always one phone call, one text away, and that is my personal cell phone. It's not a company cell phone. So if I can help in any way, you know, this is my passion. That's how I started, helping startups and smaller businesses. So whatever I can do to help, I'm always, also, I try to share resources. Yeah, contact me. My phone, my email on Instagram, Facebook, whatever. And if I cannot help you, I will at least try to connect you to the person that can help you.
Fantastic.
And I will open up to
Yeah, let's see.
questions.
Does anybody have any questions for Ms. Caporusso? We have a gentleman over here.
Oh, yes.
The line of credits, is that we considered a loan?
Yes.
Okay, so is it the same process for line of credits?
Yes.
How does,
It is. So it is. Let me see here. Okay, so it is. It's just, I guess that compared to a real estate loan, the process is less extensive and it's cheaper. One of the things that we have to be very careful with lines of credit is that, in what I've seen the most challenges with people understanding, even experienced business owners, is that they call it lines of credit, but the real name is revolving lines of credit.
Oh.
And at the bank, they usually give it for 1 year, 2 years tops. So what they're expecting is for the line to revolve, which means go up, down, up, down. It's like a credit card. You're supposed to pay it off by the end of the month, or at least pay down as much as possible. Because and I have, for instance, many years ago, I have a gentleman that asked for a line of credit. And I said, okay, how much? It was like $120,000, $150,000. And then he used it all at once, and then he didn't revolve it, like he just paid the interest, because that's another thing. With lines of credit, you're just responsible each month for the interest, right? But then after 1 year, the line didn't move, and he asked to renew it. We renewed it one more time, and then it was same case. And I said, I think what you need is permanent financing and a term loan, not a line of credit, because clearly this didn't solve any problem that you had or challenge that you had. That's why you have to be very upfront with your banker, and have a banker that works with you and that understands your business more than anything. Or or if you have access to a credit card, you can use it, but just be very disciplined with it. Just that, but of course, credit cards have a way higher interest rate than a line of credit. SBA offers lines of credit.
We have a question over here, lady in the glasses.
So, like on the grants, like how do you go about finding like a legit grant, like because like, when you Google stuff, or you sometimes, find people offering you a grant, but then scam,
Yeah.
So like, how do you really know where to find them, how to search them, if they're legit, or like just how to even come across them, or where to go to find them?
I would start with the university and the Chamber of Commerce.
Okay.
And they'll give you a list of grants and, scholarship. Like, I think that's another name they use. Scholarships opportunities. So I would start there. I'm a huge advocate for local stuff, like buy local, so get financing local. So start there.
Okay.
Because again, I've been part of it, I witnessed, and like that lady, and I still work with her, like on a personal level, I send all my work to her, because I loved how she started, through the McAllen Chamber of Commerce. She went to one of those, talleres to learn a skill, and then she knew how to do the wood thing, and then that turned into a business that now she owns. Through Latina Hope, that was the name of the program.
Oh, I know that she was talking about, they're like $5,000-$6,000.
Yeah.
They do wood and carve,
Yes.
like, you know what do you call it?
And she got I think she got the money through the McAllen Chamber of Commerce. Also, they help promote your business.
Also what?
They help promote your business,
Oh.
the chambers.
Quick question on that. Do you have to live in that city where you're asking the Chamber of Commerce for funding, or is it, how does that work?
I don't want to, lie to you, but I think that you need to, either your business be there or yourself. I think so. But there's chambers of commerce everywhere.
Yes.
Each city has and the university is regional, so they work with you all. Another question?
I have a question about credit, because you talked about good credit and a good business plan with good financial projections.
Mhm.
You told us about utilizing the university to help with the projections. And I just wanted to also point out that we will be providing a little session on the 16th about business planning and financial projections. But when we're an entrepreneur, we're getting started, we don't have the best credit. How does one go about starting to fix that credit? What are some good pointers that you can give us to start fixing that credit?
So I don't do that for a living, but one of the things that I would say is that, fixing your credit is a marathon. It's not a sprint. So I know a lot of people that offer, to fix your credit or whatnot. I always tell people, and I say this with caution, is to try to first do it yourself instead of going through people that fix your credit, just because it should be a discipline and you should learn how to do it on your own for the long run, because if not, you're always gonna need someone that fixes what you do. So I would say, the credit score is based on several factors, right? I think it's length of your oldest line of credit card. Also on-time payments, debt to income ratio. A huge thing is that if you have a credit card, you should pay it off every month. That helps your credit score increase. And that's that's a big thing that people don't seem to understand about credit cards. It's not free money. It's money that actually gains interest at a very high rate, averaging 20 to 30% on average. So I would say, if you have credit cards, and again, I'm not a financial planner, I'm not certified, I'm an economist, is that you need to be financially responsible and conservative for a little bit, and you will probably have to work towards paying off your credit card. And what I would say is at least all your credit cards, because that's usually what puts people on the bad spot for credit score, and start paying off from the smallest to biggest, and that you'll see that will turn your credit score up really high. But I would say, that's one thing that I will do, and then it will progressively go up.
Yes. And so in terms of the different suggestions, the crowdfunding, the bootstrapping, would you consider it a good idea just to explore all the different facets where we can get, like you said, grants and monies that we can win in like business competitions, and so we could start to grow that business revenue, so we have something in the bank when we go to you with our business plan, and now we fixed our credit score, we have our business account ready to go with a little bit of money. Does that look better to you as a banker to fund our project, our business?
I mean, okay, there's several questions there. There's several. So the first one is, would I think that you should explore different sources of funding? Absolutely. If you have the time and the energy, go for it. That's a no-brainer. But I would say at the beginning, it will probably take all of that, right? You will probably take getting a grant, using some of your funding, asking family, try to secure help from incubators and accelerators. And then you ask if coming with me, it helps to have a little bit of money in the bank and a good credit score. Absolutely, that helps. But if you don't have all of that and you don't have like the perfect picture, tuxedo financials, then that's why you have your SBA and your government resources and your local resources to help with that.
Okay.
And I think those were the two questions.
Yes, yes. So you're saying that we can do it?
Yes.
I hear yes.
Yes, and again, like I said, there's many resources out there. It's just knowing the resources more than anything. Go to your local chambers, your EDCs, university, like I mentioned, SBDC, and each local partner, like I call it, has a specific purpose and a specific role in your long run and marathon as an entrepreneur. So you may need some at the beginning, you may stop needing some towards the middle, but in the long run, the more knowledge you have and the better understanding of your business, product, brand, and everything, the better off you're going to be. At least that's what I've seen in my experience as a lender. Yes.
I just walked in and was listening, and you may have said this, but when you do look at a small business, are you wanting 3 years of financials and before you will really even consider loaning money to them?
Short answer, yes. If it's a commercial loan, which is what I do day in, day out, that's the short answer. But when you don't have that, that's when the SBA, that's when we have other programs and products that we can offer to entrepreneurs and to business owners. That is when SBA steps in, when we don't have those 3 years, but we have a solid 2 and we have collateral, or when we don't have collateral. So
The SBA backs it up.
yes, so it's less risky. But I know there's other partners. I think we still have a local lift fund office, and that's another resource that I forgot to include in there. There's also lift fund, there's people's funds. Again, there's many resources when you can secure your non-traditional financing, which is through a bank.
Where can we access a list of all these things? So we always come up with the same stuff.
Yes.
I already asked that.
I know, again, I know a few. I put some on the presentation. I know that maybe here they can work on a post and I can even help with some resources, but I would say, like I mentioned, start with your local chambers. Start here. I know here they have grants and they have prize competitions and prizes. Go to your bank, and then also the internet is a great resource and great source. But maybe the next one, can be, you can create like a little cheat sheet.
Yes.
That's a good idea.
On the resource network.
Yeah, on the resource network.
And
Yeah.
our biz grid.
Yeah, there's one slide there with the ones that I've worked with, and but I'm happy to help with any questions or
Okay.
direction.
Do we have any other questions? I don't have any questions in the chat. So
On Instagram, we just got lots of thank yous, and this was helpful.
Oh,
and that
that's
kind of
awesome.
thing, yeah.
I'm like, Mom, if you're watching, no, she's not watching. She's actually taking care of my baby because, moms, we have to always work around baby schedules.
Well, I want to thank you guys for the opportunity to have, for Bobby, to be able to come and speak on behalf of Vantage Bank and to our
All the way from
crowd.
South I'm kidding. I thought that this was going to take like 40 minutes, and then Adamais was like, it's only 20 minutes. But sure, we can leave a whole hour and a half earlier. So that's why I was like, oh, it's not far.
That's excellent.
But
So
yes, thank you.
Before, yes, so everybody, round of applause for Bobby.